Welcome to Trade Pro. Are you struggling to match your real-time trading result with the backtesting result of any strategy? If that is the case, it's because you aren't following these three very important rules that I'm going to outline in this video. These are the things that you need to be doing in order to see real-time trading results that match the backtesting results. The first thing you need to do is make sure that you're only taking backtesting results from the times of the day that you actually will be trading in reality. You're not going to be trading while you're sleeping. So what you need to do is get a sessions indicator and create the U session. So here I have the Trade Pro session, and that is just the hours of the day that I will actually be looking for signals. So you can literally just search sessions, and there'll be a ton of different indicators here where you can choose the hours that you want to outline. So for whatever hours you personally are going to be trading, realistically, only count backtest data from those hours of the day, because again, you're not going to be trading while you're sleeping, and we're trying to make the backtesting results as realistic and similar to real-time results as possible. Okay, so you can see for my session, the Trade Pro session starts at 6 a.m. in my local time, and it ends at 5 p.m. my local time. So whatever hours you are going to be looking for signals, realistically, choose that set of price data and only take your backtest results from those time slots. Okay, on to the next one. Now this next one is so significant yet so ignored and glazed over by new traders. And what I'm talking about are fees and spreads. They make such a significant impact on the gain on the account over a series of trades. So I want to show a very simple example to illustrate my point so anyone can understand it. And after you see this, you're not going to think that it's insignificant anymore. So let's start out with just a basic flat fee of 0.01% to enter and 0.01% to exit. So assuming a $100,000 position size, there's a $10 fee to enter your position and a $10 fee to exit your position. So $20 round trip fees on a $100,000 position size. And you have a $10,000 account size. So let's assume that you're using a 1 to 2 risk reward ratio, and each winning trade you're aiming for a 2% gain, and each losing trade you're risking 1% of your account. Now let's calculate in those fees as well. So winning trade plus 2% on your account of $10,000 is $200, but when you subtract the round trip fees, you're left with $180 profit plus 1.8% on your account. Now with a losing trade, you lose 1%, so $100 of $10,000, but then you subtract round trip fees, $20, and minus 120 or 1.2% of your $10,000 account. Now let's do the calculations to show how significant this impacts the account gain over a series of 100 trades. So let's say that you have a 50% win rate with a 1 to 2 risk reward ratio, 50 wins, 50 losses, and you just do it without including fees in the calculation. 2% times 50 plus 100% on your account, 50 losses times negative 1% minus 50% on your account. So you gain 50% on your account, right? In theory. Then with fees, 50 wins, so it's 1.8% now with fees times 50 plus 90% on your account from the winners. 50 losses, we have the calculation, 1.2% times 50 is minus 60% on your account, so your total is only plus 30% on the account after fees are included. So you go from a 50% gain on the account to a 30% gain on your account. Can you see how significant fees are? I don't really think I need to say all that much more, but even with just 0.02% round trip fee, you're left with 30% gain on the account instead of 50% gain on the account, assuming all these other factors like a $10,000 account size and everything else mentioned. But still, you see how significant this can be and why you need to implement this into your backtesting if you want to really know how it's going to perform in real time. Makes a huge difference. The last thing that significantly impacts your backtesting to real-time trading results is the subjectivity of the strategy that you're actually testing. So if you have a strategy that is fully indicator based and could easily be programmed into a automatic trading bot, it's likely very, very rigid and not subjective at all. And you're probably going to see very similar results between your backtesting and your real-time trading. But when you have a strategy that is more so based on patterns, price action, support and resistance, things that are a bit more subjective, you're going to have a tendency to slant your ruler or kind of have that hindsight trading mindset where it looks really good until you actually do it in real time. So, for example, we have something like a breakout strategy where it's like, oh, look, clearly I would have shorted right here when it broke to the downside because it's so obvious. Of course I would short here and then win the trade. But if you don't have strict rules to follow, it's hard to backtest that and actually say that that's what you would have done in real time. So I guess you would have done the same thing right here as well. Short at some point along here and win. Or when it's like a support and resistance flip, you could say, hey, look, this pulled down here and it found support above the prior level and then continued up. So I went long at some point along the way here. And then I won because price went up afterwards. It's like, it's so easy to say that you would have won the trade, but when it comes down to actually trading it in real time, I think you're going to have slightly worse outcome than you think you're going to. Yeah, so I'm not a huge fan of that type of trading just because it's hard to backtest accurately, but I'm not saying you can't be profitable trading that way. I'm just trying to say you should develop rules that can be written down where anyone can follow them. So just do your best to make it as rigid and rules-based as possible, and not to just have this sort of floaty type of situation where you're just kind of like, yeah, this one looks good. Like, I feel like this one looks pretty good to take. It's like, no, that's not how you're not going to succeed doing it like that. Come on now. So yeah, have some strict rules-based system and follow it. So that way your real-time trading is as similar to your backtesting as possible. All right, so I think that's pretty much all I have to say about making sure you do back testing properly. It is a big deal, so make sure you listen to this advice if you're going to be back testing your strategies. Anyway, if you guys like the videos, make sure to like the video. And don't forget to comment down for the YouTube algorithm. And subscribe if you haven't, of course. But anyway, have a nice night, everyone. Thanks for watching.